Good afternoon, everybody. Today I wanted to give y'all an update about the market, some of the pros about the market, and then some of the cons about the market and what some things that may concern me right now in terms of where we are in this AI boom. But without further ado, I'll just go ahead and jump right into it. Check this out. So one of the pros is that about 84% of companies have beat their earnings expectations for this quarter. This is big because if companies' earnings are typically trending in the right direction, then the market will typically continue to follow. So that's a very strong point, one of the pros. The second thing is that there's strong momentum from semiconductor sector as well as just the whole AI boom in general. And we'll talk more about that here in a second. Now, let's get into some of the cons, some of the things that concern me about the market. Right now, what you can see is this is the 2-year Treasury yield right here. It's important to understand the relationship that the bond market has because the bond market is far larger than the stock market, as well as these rates dictate what will happen in the short term as well as in the long term. But the thing that concerns me here is the short-term treasury yield right now is sitting at about 4.12%. This implies that the stock market or the bond market realizes that there is a strong potential for a rate hike in the future. And currently the Fed funds rate sits at about 3.5 to 3.75. So there is quite a bit of a gap, almost a 50 basis points gap in where we sit right now to what the market or what the bond market or the 2-year yield is expecting in the future. The other thing that I'll point out is this, inflation. Some economists are anticipating that inflation may top out at 6% by the end of the second quarter here. So this is very concerning because back in 2022, going into 2022, the market had a really big correction, about a 20% decline because inflation had peaked at about 9%, and therefore that led to the Federal Reserve having to hike interest rates up to about 5.5% in order to try and tamp down inflation. So if inflation does spike again, which we are starting to see it trend higher, that can be a huge problem for the economy. The next thing that I'll point out is junk bonds, right? So junk bonds, typically what you want to see happening in the junk bond market or high yield bond market is you want to see high yield confirming the move in the stock market, meaning if the stock market is actually moving up, you want J and K or the high yield treasury bond market to be moving in the same direction. But as you can see, this is a weekly chart. J and K has actually been declining as the market has been ripping up. As recently as 7,500, it topped out at the S&P 500. This is a chart of the S&P 500 now. It peaked here at 7,500 here just a week ago. And we saw here with J&K was actually declining here. So it's not confirming the move that's happening in the stock market. So the stock market may have to play some catch up and may pull back pretty significantly here, maybe 5 to 10% here in the short term. The next thing that I'll point out is this, and this will wrap up this video. But I want y'all to pay attention. I'm not going to say the name of these stocks, but y'all can see the tickers here because I don't want to get in hot water with compliance. But what you see here is a stock that actually has gone parabolic, meaning it's just gone straight up, up, and up. And at this point, you'll see a lot of people start to jump in and say, oh, I don't want to miss out, or they'll have FOMO, which stands for fear of missing out. And so these people will pile into these stocks that have actually gone parabolic. But when I see something like this, I typically get concerned because what goes up really fast like this typically rolls over pretty hard. Now, this company is in the memory space for the AI build out, which is very strong for this company and a big deal because their stock price has appreciated quite a bit. However, I will point this out. Many of you may recognize this stock from the .com era, right? I'm not going to say the name of the stock, but you can see the ticker there and the name of the company. And you can see this stock was part of the dot-com build out because of hardware that they provided to all the companies back then. And you can see it ran up very significantly here, leading up to the peak here in 2000. And I want to point this out. You see this decline here. Although this doesn't look like much, if we actually measure this out, measure this move out from this peak right here down to this low point, let me grab that again. So from this peak down here to where it found its bottom, that was about an 86% decline on this stock. So if something goes up very fast, very quickly, it can typically come back down pretty hard. And now here's something that I really want you to pay attention to. Notice I have drawn these red lines here on this chart. It took this company in this window 26 years after this 86% decline. It took this company 26 years for their stock price to exceed the price that it had reached back in 2000. Let that sink in for a minute. So that should tell you, if you see something going parabolic like this, it may take a long time for that stock to recover if it does roll over. So you have to ask yourself this: if you are participating in a company that has gone parabolic like this, you have to start to ask yourself, at what point do I start to take some chips off the table, or do I start to book some profit on this? And what I always tell my clients is, if you've gotten 80% of a potential 100% move, then you have more risk to the downside than you do by potentially getting another 20% on the upside. So that's not financial advice, but that's just something to consider. And also, if these AI stocks make up a large percentage of your portfolio, you got to ask yourself, if the market does roll over, say 20, 30, 40, or 50% over the next year or two, how would that impact your chances for retirement? And so how would that derail your plans for retirement as well? So these are just some things that I noticed in the market, and that kind of concerns me a little bit, but there's also still a lot of positive that can happen in this market. But I'd love to hear your comments below. Please like, comment, and subscribe to the channel, and leave your thoughts down below. Thanks. Hope this helps.